You're one of the few EA developers and vendors that is actually a trader.
I knew I needed to break everything apart and rebuild it so I can just be a trader, because that's what I want to be.
Your EAs are awesome.
I like my EAs as well.
The traders should leave the EAs do their job.
I think I did it. I'm gonna be a millionaire.
Ryan Brown is the developer behind some of the most stable expert advisors on the market.
Making a profit more than 12% a year is considered a high-risk investment. And what we can achieve with our algorithms is much more than that. And some people don't realize that that is actually a pretty good method of growing a $1,500 to $3,000 balance into over $100,000 in a matter of 3 to 5 years. And it's not that much time. And just a little bit of patience and a decent strategy and a good algorithm with that produces 2 to 5% is really all you need.
Hey Ryan, it's a real pleasure to have you on my channel, and one of the reasons is because you're one of the few EA developers and vendors that is actually a trader. The other reason is that your EAs are awesome. I've achieved the most steady and consistent results in 2025 with your EAs. That is why I wanted you to be the first EA vendor on my podcast.
It's great to be here. Thanks for having me. I like my EAs as well, so I'm glad that you do. Mutual.
We've spoken many times in the past, but I don't know much about you. Can you tell me more about how it all started?
Yeah, sure. I was trained as a classical musician.
Oh, really?
Started at age 3, so really long time ago. I'm 39 now, and have 4 other siblings as well, and they were all trained. All of us were trained as classical musicians. Started on the piano, eventually got 5 pianos in the house, and all of my siblings, including myself, went to Juilliard school in New York City.
Okay.
I went to college in New York City as well for music, and then started a professional career at 19, performing.
Okay.
Doing that for 20 years, and actually right when I started the first year, when I was 19, I was making some pretty decent money as a musician and wanted somewhere to put, start investing. So I started thinking about investing at age 19, and I had a ton of downtime in my hotel rooms waiting for concerts. And so it just made a lot of sense. And I found the Forex market and started, losing basically in the Forex market, like as I was waiting for concerts, because everybody loses in the beginning. And so I started looking at algorithms, and went down that whole rabbit hole, and was really fascinated and saw the connection between trading and music. Composing music is really similar to designing and developing a trading system. And so I found a lot of math involved in the connection between the two.
Okay, I wasn't really expecting that you were a musician, honestly. But the funny thing is, we quite often recognize things from our hobbies or our previous jobs into trading, especially into algo trading, like the consistency I got when I used to trade more manually, and now with expert advisor, this consistency. And my wife always says that she's not as consistent as I am with everything I do, because I used to train martial arts for nearly 20 years now. So I got used to this, that I have to go to the gym every day and I have to do that and that to improve. And once you learn this consistency and implement it into not just trading, but into your daily routine, it changes everything.
Oh yeah. Consistency was something that I was trained as a child growing up, in being consistent with practicing and having a good work ethic. And being taught that at an early age, I think helped me a lot later in life to really work hard towards one thing. My parents never wanted me to jump outside of classical music. They're like, you're just gonna stay with classical, you're gonna get good at it. And I kind of just rolled with that. And so I never improvised, I never played any pop music, even though I wanted to. But I stuck with it. And that's what kind of got me interested in the Forex market. Is, a lot of people will branch out into other areas of investing or trading, doing futures, indexes, or whatever it is. And I just stuck to Forex pretty much. I do trade a little bit of indices now, but mostly Forex. And I'm just gonna get good at this, just like I did classical music. And now 20 years later, here I am.
Didn't your parents support you when you quit? Were they angry with that? Or did they understand later that you were you took the right decision?
I think that when it came to music, it was difficult because I was the youngest out of the 5 of my siblings, and so it was just kind of like this coming of age thing. It was expected to play music, but I was the only one that went down the world of finance in trading. None of my other siblings took an interest to it, and so when it came to music, I think they thought I was destined for it. But as a trader, I think that I took them by surprise for sure.
Aren't they using, even as a hobby, as a side thing, any of your EAs for some passive income right now, or they're completely against that?
You know what's interesting is that I've actually controlled my siblings and all family members from using any of my algorithms. I want to keep it as clean as possible with family members. I think it gets really tricky when you're doing investing for family members, and if something goes wrong, then I don't want relationships to go sour. And so I care more about my relationships than making my family money or making more money for myself. I'd rather just find and help other people out there besides family members. But maybe that will change down the road when I become even more comfortable with who I am and how I do things. But I think it would be really like a small start with family members. And there has to be a lot of trust there as well. And I care too much about my family members for them to invest with me at this point. I think because I love them too much. I just want to be really careful, and making 2% a month, 2 to 5% a month is a lot. It's a lot of profit, and I think that to them, they're like, nah, he can't do that. And I have been doing that for the last 5 years. So it's about a trust in me, but it's also, I'm going to take it slow with my family members over time.
Absolutely. Quite often, my closest friends ask me okay, give me a robot, or tell me a robot about it. I'll buy it and I'll start trading. But it's really hard to recommend to the people you love. And especially recently, my sister joined the team. She's in my trading team now, and she's managing many of the accounts for the academy. And when she asked me, okay, which robots should I put on my personal accounts? It was so hard to recommend any because it's my sister, right? I don't want her to lose money. That's really, really hard. But if they trust you at one point, that's okay. If you build the trust, if you earn the trust, then it's not a responsibility anymore because you show what you have, and it's their decision, no matter if it's a family, friends, somebody else.
It's so true, because I've had family members actually ask me, can you train me to be a trader, or can I use your algorithm? And I'm just like, I can help you, but I also want to make sure that we have a good relationship. And I feel like when money gets involved with family ties, it just gets too tricky. And it doesn't matter how good my stuff is. And I trust it. I trust it with my own money. But the thing is that, I always see it. You see it in movies, you see it in TV. I've experienced it firsthand. When money gets involved, it can sour relationships. And
absolutely.
It's unfortunate because I feel like I have a great vehicle for family members, but I just can't get them to use it because I just don't feel comfortable with it.
I understand. I feel the same way when it comes to the subscribers or to the clients in the academy, everyone that is following us, because when we recommend, and we try not to recommend, we just want to review expert advisors. And that's why I started the 100K project recently, where I'll be putting 100K accounts, trading different robots. Many of your EAs are already in there. And I want it to be fully transparent. If the account fails, it will be there on the page. If it does well, it will be there on the page. So we want to really create this trading environment where we will show the results transparently with the track records. At the end, we will leave it to the people to decide which one they want to pick to risk with their own money. At the end of the day, it doesn't matter if it's a family friend or a subscriber. They all matter because they trust us by following us. So It's really a huge
exactly
responsibility.
Right. You do what you can you give everybody a full image of what to expect with this.
Exactly.
And making a profit more than 12% a year is considered a high risk investment. And what we can achieve with our algorithms is much more than that. And it's really cool. And people that hear about this for the first time, they're like, no, you can't possibly be making more than 12% a year. And yeah, it's possible to consistently do it. But you have to show everybody the good and the bad so they know what to expect from this. And that it's not always going to be roses, basically. And if they expect that and for the long term, then yes, this can be really rewarding. Algorithms and robots trading for you on autopilot.
And I remember the first call we had with you, you were probably a bit worried. I remember you said, Petko, my robots are not so attractive in terms of return because they make 2 to 3 or to 5% a month. And in some of your videos, you show robots with 50 or 100%. And I don't know if you remember what I told you, but I told you I don't want to show such robots because I know they're risky. I don't want to mislead and give false expectations. I want to trade exactly with robots that make steady returns in the long term, 2 to 3%, 5%. That's more than enough. Like, this is a realistic algo trading. And I believe more and more people will realize that. Unfortunately, many will realize it after a few blown accounts, which is usually the case. But that's the price you have to pay sometimes to get to the right product, the right trading platform. So if you can answer my next question, honestly, will be great. Because quite often my subscribers and clients and even friends, right, ask me, all right, which is the EA you suggest for passive income? And more often I recommend the Powerhouse EA and the Sharpshooter strategy. Tell me, am I right? Is this the best of your strategies? Or at least at the time of recording this podcast?
Sure. I started designing algorithms back around 10 years ago. It was about 2015. And I created a strategy called the Ranger, and it was targeting the Great British Pound and the Canadian dollar and the Aussie Canadian dollar as well. So these two pairs. And it was basically a range trading strategy. And when I developed this, I ran a back test for like 20 years or something, like maybe it was 15 years. And I remember running into my living room and telling my wife, like, I think I did it. I'm going to be a millionaire. I was like freaking out because I thought I found some gold mine and that I designed it. It was my first custom built algorithmic strategy that was completely all of me. And so when I saw this, I was like, okay, I guess maybe I have a new career. Maybe this is really something for me. And then over time, I started designing and developing more strategies. And then, Vigorous was about 3.5, 4 years ago. And the Sharpshooter has now been live for about 3 years. And the Sharpshooter is a scalping strategy for the Euro-US dollar. Right. It's basically hit and run, looks for 5 to 15 pips each trade or each basket of trades. And I think it's probably one of my best ones. It's because, and it's different. It's unique because it includes an adaptive stop loss. Most algorithmic strategies have a hard stop of either a percentage or based on pips. Right. And when it's a hard stop loss, it means that's not very flexible. And an adaptive stop loss is pretty rare and difficult to achieve in an algorithmic strategy because it has to adjust to what the market is doing. And so it has to be based on an indicator. Sometimes it can be based on AI as well. And in this case, it moves with the market. So if the market looks weird, if the Euro-US dollar is starting to have strange price action, then it will close out trades because things aren't looking right. Or if it's becoming too aggressive. And this adaptive stop loss will take effect in probably 80% of cases. And so there's still 20% of cases that it may not activate. And so there's a secondary stop loss in place that's a hard stop loss that has still yet to be hit with the strategy in the 3 years that it's been designed, or since it's been designed. It's really cool.
I think I have a pretty clear idea how the adaptive stop loss works, but can you explain it to the beginners who are listening? Like, we all know what is the hard stop loss. We all know what is the trailing stop loss. But can you explain it with simple words? What is the adaptive stop loss? How it works? And if any developer is listening, like, they might use it for their own EAs as an idea at least.
Sure, yeah. So when I was designing the Sharpshooter, I saw that it was a good strategy without the adaptive loss. But the adaptive stop loss actually improved its profitability, which is the first time I've seen that happen. Previously, without it, it was potentially blowing accounts. And then implementing it, it really started changing things. And how this adaptive stop works is it's basically based on one indicator. And this indicator is called the A run. It's a custom indicator for MetaTrader 4, MetaTrader 5. And it's basically showing you what you guys typically know as oversold and overbought. But I always say it's like overextended or just it's like underextended, or like basically it's hitting peaks and it's hitting bounds, and it can continue to keep going. So that's why the easiest term is oversold and overbought. You can also say extreme territory, but this indicator basically shows me when price is ready to potentially reverse. And so when it's out of that cloud zone, when we're looking for short positions and it switches direction, then that means that trend in that price is slowing in that one direction. And it's a good idea to close out trades where they currently are. And in most cases,
no matter if they're in a profit or in a loss?
It could be either in some profit or in loss. But typically the take profit it's also adaptive. It changes based on how many trades are currently in with the strategy. And the more trades that it has in, the less it pulls, the less profit it pulls. So basically everything about this strategy is adaptive. And if this A rune is showing us that the push on the downside or the upside is starting to slow down, then we're going to close out trades for a preventative loss, just because price is looking like it's slowing down.
All right, so I'm not a developer, but is it like there are many ifs at the EA, like if this happens, or actually it's or this happens, or this happens, or this happens, we go out and we exit the strategy to make sure we don't handle any losses. There are a few conditions, and the first one that is met will close the trade.
Yeah,
is that pretty much how it works? Or a few conditions, a few indicators should be met, confirm each other to get out?
Sure, yeah. So the first, or the take profit for the strategy is basically 10 pips for each individual trade or basket. And if the strategy has more than 10 trades in at the market, then it will start to pull back on its 10 pips profit with a dynamic way of pulling back after each consecutive order. So this will shrink its 10 pip take profit down to potentially 7 pips or 6 or 5 based on how many trades that are in there. So that's the first take profit zone. And if the take profit for that isn't met and we have more trades in, and then the adaptive stop loss potentially takes over at that case, in this case. And so you have basically multiple criteria, multiple stop losses and multiple take profits that change based on how fast the market is moving, if it's stagnant, if it's not pushing, if it's been sitting for a certain amount of time, or if there's like multiple hours that go by and you're not hitting your stop loss or your take profit. And the longer that a group of trades are in the market, the more likely you are to see them close out for either take profit or even a small stop loss. And the Sharpshooter, actually the biggest stop loss, adaptive stop loss that it's ever had in its 3 years was 4%. And that was recovered in about 6 weeks.
Great, so that probably proves a bit that it's really hard to do it with a simple expert advisor, because for the last 5 or 6 years, I've been really struggling and trying to develop EAs using strategy builders, generators that are really simple. Like, I wanted to simplify as much as possible the algo trading, like one entry, one exit indicator with a good backtest, but there is always something missing. So what you're just saying probably proves that if you want a consistent strategy, you should not look for simplicity. Of course, I believe it should not be overcomplicated, because just the code will be very long. Maybe the MetaTrader will go slow. If it's a 10K rows of code, I don't know how long is your code of expert advisor, but sometimes we see expert advisors that take ages to backtest. Probably it was not coded well. I don't know what's the exact reason behind it. But with your expert advisors, I see that it's like a complete thing, a complete strategy, very well measured, a few exits, a few entry indicators. And that's like what it's needed. It works.
It's difficult to know what's actually needed in this market. Needed to continuously profit, to be consistent. I think that the most important thing for me was long backtests of at least 20 years. So going back as far back as data will allow me. And so I purchased my data, my backtest data, each month. And so I can have close to institutional level data for my backtests. And this is so important for my strategies, because I can, you've heard about like walk forward data and backtest data, and then also trying to make sure that your strategy is capable in the future. And it's difficult to really do that.
Can you share which data you're using? Can you reveal the secret of which
I use Tick Data Suite. I think they're like $50 a month or something like that.
Okay.
And it allows me to download up-to-date Dukas copy data, which is a pretty decent institution to pull data from.
Yeah.
It's not perfect by any means, because if you use regular MetaTrader 4, MetaTrader 5 data, it has way too many cracks, way too many holes. It's imperfect, and it doesn't really give you accurate tests, because you'll see one strategy that is profitable with MetaTrader 5 or 4 free data, and then you'll use the Dukas copy data and it will be completely different. Some strategies are very similar. They'll mirror very similar, but other strategies just do not. And so it's a good idea to find it and to build one that works in both. They're not going to be exact, but I find that that's to be a really a criteria to kind of be met in order for a strategy to be strong. But it's difficult to know what kind of mechanics in a strategy make it good. Is it single order? Is it multi-order? Is it grid? Is it Martingale? What kind of money management is used? Because people get so frustrated. It's like, oh, your strategy is Martingale. You're gonna blow your account. Or if it's grid, oh, that's dangerous as well. You might as well just go to the casino at that point. And these things are what other losing traders are telling them what to do. You shouldn't do this, you shouldn't do that. And 95% of people are losing, so you're just taking losing advice. And so you have to, that's kind of how this whole thing started with me. I knew I needed to break everything apart and rebuild it to see what actually worked here. And so I found that grid trading EAs or strategies, multi-order or grid, was the first big thing that I needed in order to start becoming profitable. And the second thing was trying to figure out what kind of Martingale progression worked well in the majority of strategies. Was it a complete double up, 1, 2, 4, 8, or was it more intelligent, where it's a semi-Martingale kind of increase, where, for example, my algorithms really focus in on a 1.5x every third trade in the market. And I found this to be pretty consistent across all my algorithms.
How do you define your strategies? Can you define them as grid EAs, grid martingale EAs, recovery EAs, swing trading EAs? What type of strategies, or let's say what type of expert advisor is the Powerhouse EA?
The Powerhouse EA, it basically taps all of those. The Ranger is range trading. The Vigorous is Euro US dollar scalping, looking for 3 pips on each of its trade, but taking 20 to 30 of those a day. The Sharpshooter is a scalper on the Euro US dollar as well. It trades on the M15 timeframe instead of the M1 like the Vigorous, but it's still taking 10 to 15 trades a day, looking for 10 pips. So it's not quite a small scalper looking for short trades. It has a little bit more flexibility. And then you have the Crackerjack, also another scalper for the Euro US dollar. You can find that I like to build scalping strategies for the EU because it's a great pair for that. It's great for hit and run. It has so many traders, banks and institutions put so much money in on the euro US dollar that it doesn't change its personality as much. It kind of retains that. And if it does have a personality change or a behavior change, it's really slow over the course of time. And so that's why I target this pair, because I feel like it's the best one to really find good strategies for, especially scalping ones. I've designed also trend trading strategies like the comeback kid as well, that are still doing really well. But it's difficult with trend trading strategies because if the trend changes and you're caught on the other side, it can cause losses. And so that's the
we
problem.
never know when it will change, right?
Exactly.
Whatever indicator you use, there's never 100%.
Yeah, you always hear that, oh, the trend is your friend, but until it's done. And a lot of times people don't get into the trade until the trend is basically done.
Yeah, absolutely. And this old sayings, I recently mentioned in one of my videos, the saying, the history repeats itself in trading. And I said that, I never saw a very same chart, let's say a very same H1 chart, to repeat twice or a few times. It's maybe a small candlestick pattern, maybe a formation, but not like a few days. They will never repeat. That's what you said very well, that the hardest to achieve is a strategy that will be consistent every day, small returns on this changing market, because the market is changing every day. It's different every day. Especially the manual traders, they try to recognize patterns and candlestick formations that will work today, will not work tomorrow.
Right.
It's so hard. It's so hard to trust
It's
that.
so true, because you'll have a strategy that is consistent for a few months or even a year, and then it will just start going sour. And you hear this in interviews on other channels where somebody's like, yeah, I had to change my strategy, or I had to put it on pause and do this new strategy. And it's this constant like proving yourself to the market that you can still be profitable. And this is one reason why I went down the path of grid and Martingale with my algorithms, because I saw these as tools, because my strategies, in order to be consistent, needed more chances to be wrong. And with a one trade type of strategy looking for a set take profit and a set stop loss, it couldn't find consistency. And you had to worry about having streams of losses, because every strategy has streams of losses, whether it's after a year or a few months. And they needed more chances to become profitable. And Martingale and Grid give it those chances. And so when I hear traders saying, oh, you can't use those, they're bad. And I would say, like, I still haven't been able to build a profitable, consistent, single order strategy yet, because they're much more difficult to find. And so I feel bad for people because they get bad advice from all these losing traders telling them that you should do this and should do that. And they just don't think outside the box. And it's helped me become consistent over the last 5 years and gotten to the point where I am right now.
But we have to point out the fact that many of those losing traders suggest that because they actually lost money, right? Most of the Grid Martingale EAs on the MQL5 marketplace are just crap, right? It's just easy to put an EA with a great backtest that is over optimized, and many people lose and blow their accounts. That's why there is this negativity on Grid Martingale EAs, and people are just reluctant even to give it a try, give it a shot. But when it's really well measured, and just yesterday I recorded one video for our VIP users showing two Grid EAs with totally different settings. I went super risky on my demo account, going from 10k to 90k in a few weeks, and then the account obviously was blown. Sooner or later it will happen. And then on my live account, I'm taking very low risk, very measured, and it's doing okay. I know it's like having a sports car. You drive it extreme on the highway and you drive it slowly to enjoy. So it's the same product you may have, but it really depends on how you run it and how you trade with the expert advisor. The fact I liked with the Powerhouse, after you launched the Powerhouse, so initially I started trading the Vigorous, if you remember, and then when you launched the Powerhouse, I started testing all of the strategies. is I like the fact that you've put some kind of limitation and you've said, okay, this is the 30%, this is the 50% or 7.5%. This is the risk or this is the profit you can expect by having this risk in the account, which usually vendors don't do it. They will just give you some set files, and usually they will run a few or dozens of accounts with different set files. They will lose most of them, but they will just publish the backtest that performs well until one point when it will also blow. So having a measured grid martingale system is really hard, and I think you've achieved that very successfully.
Yeah, I think the hardest thing with purchasing or finding trading algorithms is how they're marketed to us as traders. They're shown to us that we can make 10, 20, 30% a month. And we get this idea that that's actually possible. And it makes us think that we can turn a $500 account into, $100,000 in a few months or even a year. So giving us this false hope, but it starts us off on a bad note, basically. And
Absolutely.
We can't get this out of our head. And so we keep seeking out this holy grail type of algorithm or strategy, and it doesn't really exist. And so when I set out, I said, okay, I'm going to be basically swimming upstream against all these guys that are promoting this algorithm or that algorithm that are going to likely blow your account in a few weeks or months, because they're just trying to make a sale off of you, trying to look impressive quickly.
Yeah, because it's easy to sell. It's very easy to sell. Even YouTubers, so many YouTubers, especially the last 2-3 years with the prop firm hype. I passed the prop firm challenge in 2 trades. I passed in 1 hour, and I just buy 10 challenges and go up and down with risky trades that I pass just to record the video and earn the affiliate commissions, right? Right. And then because of all of this content, all these false expectations, when Petko, Aleksandrov on YouTube shows runs EA making 2-3% a month, that's they're like, we will like the video.
Yeah, that's great. Great job.
Great job, guys. But
we can do that in like 3 hours.
Sports
cars. Like, come on.
And I also decided from last year that I'll go against all of that and I'll show realistic trading. No matter if the channel goes slow or I receive negative comments or people are not happy with 3-4% a month, 5% a month. For me, that's more than enough. And I'm sure there will be audience that will also appreciate that after time. And that's the reason I started testing your EAs in the first place.
The same thing with me. I started that 5 years ago when I started this business. I was like, this is going to be a risk. And I don't know how this is going to work out. If I'm going to find people that are interested in 2 to 3 or 4 or 5% a month, maximum 5% a month, and they do definitely exist. It's what's interesting about these people is a good majority of them are traders that have already been damaged, have been hit with losses in the past, and have seen that 10, 20, 30% a month through other algorithms is just not possible. And so it's important. They're trying to find their way. They're lowering their expectations and trying to be less greedy. Or you'll find people that are into standard investments that make 5 to 10% a year. And if you find those people, they're more willing to put down heavy loads of cash on something that can even produce 2% a month. Because 2% a month, you're beating out the majority of investments out there. And so many of these Forex traders that are using algorithms or just trading the market don't realize that even a 2% gain, you're beating out the majority of other investments out there.
Absolutely. And because I've mentioned prop firms, and it's not a topic I want to talk about, but because I achieved excellent results with the Sharpshooter recently on my Darwinex Zero account, and I'll just share the screen for those of our viewers who are watching the podcast, but I'll just share my Darwin where I have the Sharpshooter, and right after the calibration phase it made 3.5%, 5.8 in April, 1.27, which is difficult to achieve with the Darwin. The drawdown is just 2.7, and I immediately purchased the 5% target permanent allocation, and the progress at the time of recording this video is 81.85, which is something I haven't achieved with another expert advisor. So I'm very happy I started the Powerhouse with the Sharpshooter strategy at this Darwinex account. So I saw it working well on Darwinex. I saw it working well on my life account and the funded account. I'm also testing on prop firms skeptically, not because of the EA, but because of the prop firms. What is your recommended type of account for the Sharpshooter or any of the Powerhouse EA? Is it best to trade it on live account, on funded, on prop firm, Darwinex? What is your opinion? Probably not based just on your experience, but from all of the clients and users of the Powerhouse EA.
You know, that's what's nice about the Powerhouse is that you have multiple options and multiple strategies to choose from. So you can open up multiple prop firm accounts and put each of the strategies on there to see which one does best, or combine them together to add some extra profit. I used to do prop firms. I was part of the my funded FX days where my account got shut down. I had a live account there or funded account. And it was really unfortunate. And I've done some prop firms after that as well. And then MetaTrader decided to pull their license from the good majority of them from if you lived in the US. They had a lot of trouble with that. And so now my options when it comes to prop firms in MetaTrader 4, MetaTrader 5, which is what my algorithms work on, it's slim. And so that's why I've kind of pushed away from prop firms and looked towards growing my accounts in a different way. So you can still use a small balance of $1,500 to $3,000, but adding an additional deposit to your account, kind of like a glorified savings account, each month to help increase that compounding. And some people don't realize that is actually a pretty good method of growing a $1,500 to $3,000 balance into over $100,000 in a matter of 3 to 5 years. And it's not that much time. And just a little bit of patience and a decent strategy and a good algorithm with that produces 2 to 5% is really all you need.
Actually, the compounding effect is really awesome, and some companies sell that really well. Like I'm not gonna mention it because it's off topic, but I have a portfolio of indices and stocks, like real shares in a company where I purchase monthly. But how they present it in the app is that it gives you the return for the next 30 years. So it says like if you put $1,000 every month in 30 years, you will have a few millions. So if you project that with your EAs, I think that will be even more, and it will be a great sales pitch, but probably it will be a false expectation for some that will, just risk more than the recommended and will blow their accounts, or they will just interfere manually to manage trades, which is another thing many of the beginners do with algo trading. They always ask me, should I stop the EA if it goes on loss, or if I see profits and I'm happy, should I close all the trades? What I usually answer is, if you do algo trading, like leave it to the EA, because anyways you will put emotions again, which is the problem with manual trading. What is your recommendation here? Should the people interfere your EAs, or they should leave them on their own?
No, I actually try to get people to refrain from interfering. I don't intervene myself. The only time that I've intervened with my EAs over the last 5 years was this most recent presidential election in November of 2024.
Okay.
I turned off my algorithms for 2 days because I had no idea how that was going to turn out. Right. And my algorithms were in a good spot. Not many trades were open, so I just decided to close them out and profit. And I notified all of my Discord about that endeavor, and when I was turning them back on. And some decided to follow, some decided not to. And I left some demo accounts running in the background, and they all were fine over the course of the presidential election.
I do exactly the same around the New Year, for example, or when the market closes for a few days. I just leave the EAs on demo to see what would have happened.
Yeah, we have to see.
That's a rare case. Like the thing is, daily, the traders should leave the EAs do their job, and it's very important as an algo trader to trust it. Like I go to bed at a complete peace of mind. I don't worry if the account will blow or no. I know that the protections are there. I know that I diversified between hundreds of accounts now because of what we do. But I recently had a call with one of our subscribers and he asked me, okay, what I need to do, and that's the question I will ask you in a second, but he asked me what I need to do to diversify my portfolio in a way that I'll have steady income in the long term. So I said, open at least 5 accounts, go for a few live accounts, maybe a funded account, one prop, one Darwinex account, and put different strategies, put them with the protections that the vendor suggests and go with low risk settings. Then you will have this peace of mind that even something happens with one of them, the other 4 will do all right. And I'd love to hear your thoughts about it. If one wants to achieve steady results, let's say you have 10K as an investment or as a risk capital, how would you diversify between how many accounts and how many strategies or EAs? Or would you prefer to put them all in one account with a particular strategy if you're sure about that strategy?
I think it depends on the trader and their mindset as well. Because the Powerhouse has 6 different strategies. And it's intended for traders to have the ability to diversify between these strategies because each of these strategies are attacking different parts of the market. Some of them are scalpers trading on the EU, but they still have a different strategy between each of these EA algos. So it's important to kind of have a mission, have a plan for yourself. Are you okay having 3 or to 5 smaller accounts? Or do you want just one bigger account with, say, 10,000? And for me, I like the idea of having multiple accounts. So for example, I have 50,000 in public trading funds that I started back in the beginning of this year, where 4 of my algos strategies in the Powerhouse each have one account, 10,000, 10,000, 10,000. So they're trading 40,000 across 4 different accounts. So they each have their own 10K, and then I have my personal 10K, so I'm manual trading as well. So I'm basically in there as well. So 5 different strategies and diversifying. So if my algorithms are struggling, if one strategy has a loss, then it's reflecting on just one of the accounts.
So you suggest each strategy on individual account, not to trade them all together in one account?
I recommend that because it's easier on my psyche. On an emotional level, I'm not so stressed because if I see one account running 4 different strategies and one of my strategies has a loss, it's reflecting on the entire one account on the balance. And so then I'm in recovery phase and I have to wait for good trading, 3 to 4 months for that to recover. When if I have 4 strategies and 4 different accounts, then I can still look at my other 3 strategies and see how they're doing and potentially allocate more funds to the ones that are doing well. So on an emotional level, I feel like it's easier to handle when I have multiple accounts instead of just one.
And can you share what is the risk that you put in each of the 10K accounts?
Sure.
So the viewers can calculate it, like if they trade 5K, 15K, 20K, what is the risk that you would suggest with your... I don't want you to recommend, I know that you don't want to recommend, I don't want to recommend as well settings and inputs and especially money management, but how you do it?
Yeah, I think it's important to let people know, to give them an idea of what to expect and how to kind of plan this out. We can tell people what to do, like what they should be doing, or what's the best way to do it, but they don't have to follow that example if they don't want
Absolutely.
to. And I find that most people try to push algorithms beyond what I recommend anyway. So how I'm doing it is, it's basically the same difference of running 4 strategies on one account versus with low risk versus 4 different accounts running high risk. The profit is about the same and the loss potential is also about the same. But the difference is just the psychology part of seeing it on one account versus seeing it on 4 different accounts. So that's why I run 4 different accounts on high risk, so I can still get a decent amount of profit, around 3%. And doing that, I'm only risking about 7.5%. So 4 accounts, each separated, and I have a profit about 3%, 7.5% risk or stop loss. If you're running one account with 4 different strategies, then you're going to be getting a very similar 3% with a maximum loss of also 7.5%. So you can see that the only difference is the 4 accounts versus the 1 account.
Okay, so 7.5% in 10K is $750, right? And you have 4 accounts, which is $3,000 as a risk. That's something I think it's very important to understand, because I know even sometimes my team is wondering how I'm risking so much money into live accounts. Like I'm putting, last month I've put more than 25K just to test different EAs. But the thing is, when the EAs have the stop loss and the body management and the protection, we don't actually risk all of the capital, right? You don't risk the 40K, you're risking like 3K.
Exactly.
My math is right.
It's a percentage of all of your funds pulled together, and to make one. So if you have 10 different algo strategies, each of them has $1,000, then if one of them has a 30% loss, it's going to be not 30% across your all of your accounts. It's going to be much less than that. And that's the diversifying that we're talking about here. That is a small way to go. We don't want to put all of our eggs into one basket, because we don't know how long a strategy is going to work for. We design it, we build it. I know that you have your own EA studio as well. We don't know when it's going to start going through a losing phase or a winning phase, or if it's just going to all of a sudden break and just become irrelevant. And so I don't know if that's going to happen with the Sharpshooter, one of my best algorithms, and it's been performing really well. But I still don't want to put everything in on that strategy, even though it's performing the best. And I'm going to continue to diversify, and I'll begin to pull some of the weaker strategies out that are not performing as good as the others, and maybe put those and diversify into the top 3. But I'm not going to just take the bottom strategy and just put it into the top. That doesn't seem like a wise decision to me.
Actually, you're very right. And recently I had that experience with another expert advisor, the Forex gold investor, who was trading really well the last quarter, and just the last 1 month it made some losses, which is normal. It's not a great Martingale EA. It has its dips and wins, and overall it's profitable EA, but there are losing periods. And I saw that when I review it on the channel, I show some positive results. The subscribers and everybody using it starts putting more into it, and that's normal. Like after profits, you put emotions and you say, okay, let's put it on a bigger account, let's deposit more money, let's buy more challenges. And in the video I said, okay, now after I've made the profits, what I will do is I will start testing other EAs, and I will use these profits to diversify even more, rather than increasing my live accounts, because I know sooner or later there will be a dip. And that's where emotions get into algo trading. Exactly. People should know that when there is a profit in the account with any EA, you should be happy about it, but don't hype it, don't risk more in the next week or month, because the dip is coming up, especially with the scalping EAs that don't use great Martingale systems. And the second thing is, quite often the subscribers ask, when is the good time to start trading with an EA? I always say after a losing period, right? Because after a few consecutive great trades, and you start trading it aggressively, then you're getting closer to the chances of failing is just bigger. It's like, when is the best time to buy the Bitcoin, right? On the dip, on the pullback, not on the hype.
Exactly.
So people should stay away from the emotions, even they trade fully automatically. If the EA does profits, I always suggest withdraw your profits. Like for you, I know you as a vendor, you want to build long-term track records to show how the EAs work and that they're long-term performers. But for me as a client, as a trader who is actually making money out of the trading, I withdraw profits recently more and more. And that's where I feel happy about algo trading, right? Because if you just put money into algo trading and you try to build your accounts from 10K to a million, this might never happen. It will take ages and you will never actually see any profits, which doesn't make sense at all at the end of the day.
And I've seen it with some customers on my side where they'll have two different accounts. They'll have one that's running high risk, that's producing, 3 to 5, even sometimes up to 8% a month. And then they'll have a low risk trading account that's running low risk. And they'll move the profits from the high risk to the low risk. So there's less off the table for them. And they're, trying to give themselves less exposure on their accounts. And I recommend this. And you'll see a lot of traders do this as well. Manual traders that have large accounts that trade, looking for 1-2% a month. And then they have high risk gamble accounts that are fun accounts is what they quote them as. And they'll be making 10, 20, 30% a month on some of these accounts. And I'm doing something very similar with my manual trading where I'm producing about 10% a month. But I'm not deciding to put all of my funds into that manual trading because it's performing the best. I'm going to still diversify and evenly put it into all of my strategies, and I'm one of them. I'm one of the pieces to it. But I'm still investigating to see how much a manual trader can make versus an algorithmic trader. And right now, it's looking like 2 to 4% is the maximum for one strategy in an algo. Is what I'm seeing with my testing over multiple years. And then manual traders, it's difficult because most of them die out in about 5 years. But within that time, they can produce upwards of 15 to 30% a month. But it's stressful. The more profit that you try to produce, the higher the risk, the more you're better off just going to a casino at that point.
Absolutely.
Because it's basically that you're playing with fire. The farther that you go beyond trying to, the 5% is what I think that you should be trying to max out across any strategy. And if you are deciding that you want to gamble and risk more, then make sure you don't do it with all your capital.
Absolutely. And Ryan, how do you manage it all? Do you have a team, editors, developers? I know you're trading manually. I know you develop EAs, you have a YouTube channel. What is behind the scenes with you?
Sure, yeah. I have a 3-person team. So it's me. I am the owner. And then I have my developer. And my developer is out in Italy. And he's been developing algorithms for me for the past 5 years. And then I have a personal assistant that helps with my emails and correspondence and chats. And she's actually just about to, given her 2 weeks, she just started her own business and is doing really well.
Okay.
So I'm going to go down to 2 people. But I might hire somebody else to help with the emails and stuff like that. It's important for me to have good support. I want to make sure that people are getting the support that they need when it comes to technical questions. And my turnaround time is typically 2 to 4 days. And if I can't keep up with that, then I'm going to start to potentially raise my prices. So I get less sales, make less sales so I can keep up with the load. So it's not about trying to increase my prices because my algorithms are doing really well. That's something that makes sense, but it's also going to coincide with my workload. It's difficult to train somebody to respond like me, that has the knowledge, the 20 years of knowledge, to really dive deep into this with people and understand how everything works. I'm not a coder, but I know some now, since my developer, I've been working with him for quite some time. The Powerhouse is around 7,000 lines of code because it includes so many different strategies that I'm still developing even now. And the cool thing about the Powerhouse is that even though it includes 6 strategies right now, I add new strategies for free in the future. So if I design something that has a lot of potential, you're not going to have to pay the difference to add that different strategy. I do this as kind of like this ongoing, increase of the Powerhouse to make it better over time. I never want to just leave it as is and just let it go stale. And even if I do stop selling my algorithms or the Powerhouse, so I can just be a trader, because that's what I want to be. I don't want to be a salesman all the time. My passion is trading. And so once I get my accounts to a comfortable space or size, then I'm just gonna use the profits and continue to grow my accounts. And then my algorithms, either I'll stop selling them or I'll increase their price so much that people won't buy them. That's kind of the mission for me with all of this is, I know that there's a lot of people out there that want to sell you the $30,000 algorithm. That's what the focus is. My focus is I want people that have purchased previously and up until the time I stop selling to get this continued support that they need. And that will just stay for as long as I'm trading. I look at it as kind of like a family instead of, like a team instead of, customer base.
Absolutely.
And we're all trying to profit from this market together. And I wanted to stay that way.
Absolutely. I really stand behind what you said. And I know how hard it is to do the support. For me, this is a headache because I really want to answer everybody. And now I have 3 or 4 people helping me just with the support because it's just impossible, right? And I know sometimes the subscribers are upset, the clients in the academy are upset because we don't answer for a few hours or a day or 2 on social medias. And that's why we created a VIP club in the academy. So we can put together, the most interested traders where we respond immediately in a Discord channel. And I believe that if a serious trader wants to have like fast and immediate support and response from the person he's following, there should be a price for it, right? Because especially when the YouTube channel grows and your class base grows, it's just impossible to respond to everybody on time. It's physically impossible. And I like that you have a Discord. I'm sure there is a lot of scam in there. And that's probably where we should mention, because my team reminds me that for the last maybe 2 months, and I've never mentioned in the video, there is a lot of scam, guys. There is a lot of scam in Ryan's Discord. There is a lot of scam on my YouTube channel, on socials. Yesterday I saw another Instagram profile with my image and my videos with more followers than what I have in mine. I have a Telegram channel with Telegram group. I don't know if it's called a group or channel because I don't have a Telegram, but with 30K followers that's been there for a year and we cannot put it down. We reported it so many times. So I think what we can clearly say to the listeners and to the viewers is that if we contact you, probably it's not us. Like 99% it's not us.
Yep, that's what I tell people as well. It's like, I'm not going to reach out to you and say, hey, what's up? Do you want to make some money with me? I'm not going to say that. Like, absolutely. Use your judgments and also understand the character of the person that you're dealing with. Does it seem unusual for them to reach out to you with some Bitcoin investment? Yeah, that seems unusual. And so just ignore that or report that person. There's always going to be scammers in every single type of community that are trying to get your money.
There are so many. Like some days we report a few, and then on the next day there are another 10 Instagram profiles with everything uploaded. Everything is the same as mine. And I believe there are huge companies nowadays doing just that. They hire people, they educate them, and they just make copies of YouTube channels, of Instagram, of Telegram, anything, and they do it fully automatically. A lot of the comments, I'm sure by the time the listener is already at this minute of the podcast, there will be 30 or 40 scam comments below the video, right? And my team cannot even delete all of them. So don't trust that, guys. It's not us. If we reach out to you,
we do the best we can. We try to help you guys out. Just be careful, and if you're unsure about something, send us an email or send us a message.
Ryan, I have one last question. If you were to start trading with any of the EAs 5 years ago, which one would you pick?
5 years ago, I would say, I think I would choose the Sharpshooter, to be honest. It's close with the Vigorous because the Vigorous has had one loss since basically 2014. And it produces 2 to 4% by itself. But the biggest loss that the Sharpshooters had in 3 years of trading has been just 4%. And again, that recovered in 6 weeks, or maybe it was 5 weeks. And it just showed the consistency of the strategy. I built it out. I had no idea that it was going to be as good as it was. I'm like, oh, I figured out a new way of stop loss within an algorithm that can kind of move and fluctuate. And I thought it was a big deal at the time, but I had no idea how it was going to perform over multiple years. And to find out that it was this good, yeah, I would have started it back 5 years ago for sure. And who knows, maybe I would have put a lot more money on it starting out as well if I would have known how it would have performed.
Awesome. And at the end of every podcast, we have this tradition to ask our guests a few quickfire questions. So if you're ready, MetaTrader 4 or MetaTrader 5?
MetaTrader 5, 100%. MetaTrader 4 is too old. Too old.
I agree. Currency pairs or gold for algo trading?
Currency pairs, easy. Gold is too volatile. You're going to get jacked.
Agree. Live accounts or prop firms?
Live accounts. Prop firms, you can't depend on them.
I get your point. And here is a tough one for you. Sharpshooter or Vigorous EA?
Sharpshooter. That adaptive loss, I can't get away from it. And I still haven't been able to design a new trading strategy that includes something like that. So I'll just keep holding on to that one.
I know it's hard to answer because they're all like your kids, and it's like you say, you love one of them.
The Vigorous is the most popular out of mine, though. The community loves that strategy because it trades 20 to 30 times a day.
Strategy.
And people just love that in and out. They feel like they have an ATM machine. And I'm just like, don't look at it like that. It's a trading bot. It's different.
Ryan, I thank you very much for joining the podcast. It was a pleasure speaking to you. And you've done a great job through the years. And you have all of my support with the EAs. I'll keep recording videos for them as long as they're profitable, of course. But the way you've developed them, the way you take care of the EAs, the way you take care of the clients, I believe they will be profitable for the long term, and you diversified between a few different strategies, which is the most important at the end of the day. So even one fails for a reason, the others will stay. And I think every hard job pays off at one point, and now it's the time for you to enjoy the rewards by selling your product, because when you sell a good product, is totally different when you try to sell a crappy product. And you're selling a good product, so you have to be proud of that. And you're making money at the same time from the EAs yourself, which is important. As I say, I like to define myself as a trader who is YouTubing, and I think you're also a trader who is YouTubing, a trader who is selling profitable expert advisors. So be proud of that, keep doing it that way, and I'm sure the clients, the traders will appreciate it.
Yeah,
always.
Thanks for your support, Petko. In this, it's nice to find somebody that's like-minded, that's looking for conservative profits, because I think that those of us that pull things back and look for conservative gains, which is still outdoing standard investments, but looking for more conservative gains in this field, will be here longer than the majority. Everybody else will die out because they blow their accounts or they blow clients' money. And people hopefully like me and Petko will be here for the long term, the next 5 to 10 years from now, showing you guys how to continuously beat the market.
I hope so. I thank you very much one more time. I wish you best of luck, best of health, and enjoy what you're doing, Ryan.
Thanks, Petko.
Cheers. Bye.